kick things off, and I'll let everyone on board. So on my TradingView, obviously you can see I'm updating these. We've called several great trades on Ethereum. That's all in there. My ORD dollar, US dollar post does cover this slightly, but not in enormous detail like we'll go through in a second. And I posted some great stuff yesterday. So if you haven't done that yet, just check my recent videos, check my recent posts, like, comment, share, whatever you want to do. And yeah, go through it. Daniel, great to see you. I'll type back. If you've got any questions, drop them for me and I'll go through them. And yeah, we'll do that. So I'm just letting guys in now. We're coming up to 20 past, so people are starting to come along. Philip, Academy member. Great to see you, Philip. And good morning. ORD, absolutely, I can cover that. Anyone else, anything you want to put in there, I'll go over it. I'll kick things off on ORD, and I will, Philip as well, gold, excellent, thank you. I will do gold, I'll do ORD. Any other markets, let me know, guys. I'm also going to cover the lesson throughout those picks. So the charts that you guys want to look at, I'm going to incorporate the whole idea of what we're doing and how to catch that next big move. So Daniel, dollar CAD, absolutely, I can go through that. So we're coming up 20 past. If you can hit the boost button, guys, if you're brand new here, just go under this video, click that link, okay? Whether it's on YouTube or TradingView, click that link because it will really change your trading, okay? There's things in there that you simply won't get anywhere else, and you'll see that if you watch this analysis. So I'll start off with ORD, and ORD's a really good starting point for today's topic or lesson, if you like. And the reason being is because what you can see now. Now, I did a post yesterday before this candle formed, and I said, okay, well, this is very sideways, okay? All this movement right here, and it has been. And again, it's because there's no reason for it to burst out. Now, what you do have this morning is a change in the market mood, and that's why you're pulling down lower, okay? Now, this comes hand in hand with catching that next move in the market. Once you've had all this boringness, okay, this boring sideways movement, what you've really got here is a slight uptrend channel, okay? It's not very strong, but you are moving up very lightly and very slowly just because you had a new high just along here, okay? So it's a flat up move. Now, that's obviously very weak, and I wouldn't be surprised if you drop under this previous low here, just under here, and then touch on this PA over there to the left-hand side, because that's where you've got your most recent price rejection. But more to the point, catching the next big move comes nearly always after a slow market, okay? So things really slow down, and then they really, really get rampant. Now, that might mean that ORD pulls another leg down to here. And that would be quite in line with what I was saying about this move. You can see all of these candles, okay, all of this movement here. You can see the market is trying to push up, but it's not having very much success, okay? So that should tell you that there is weak upside sentiment long-term for this asset, because otherwise you would be pulling up really quickly, and you're just not. Okay, so that means if you wanted to catch that long side move, you would need to let the market do its thing and pull down, and that is how you do it, guys. You don't rush in. Okay, this at the moment is a light long, probably for more advanced traders. Okay, I would take this slightly long because it's in line with this flat uptrend. But because it's a flat uptrend and there's weak PA and you've got a very strong red candle pulling in, I would not take sufficient risk on that. You just need to be very light with this, maybe a tenth of your position size normally, or 2/10. I would take it very lightly because you're naturally running more risk. Okay, as I say, for various reasons. So if you wanted to catch that move, you got that sideways boring movement, and then boom, you let the market do its thing. Okay, and you let it pull down, okay, risk averse. That is really the crux of what we're talking about today. If you don't let the market do its thing and get out of that boring mode of sidewaysness, okay, if you like, if that's even a word, you can let it pull down and do its thing. But it's important you don't short, okay? Because a minute ago, as I said, I was saying that this is still a very light long, and it is, because naturally, with that flat uptrend, if you just look back, you've seen the same thing happen various times, and it's been long all the other times. So selling it, okay, naturally puts you at a disadvantage. So for ORD specifically, if you want to catch that next big move, let the market move down, and then you can get into the long side. My friend, do you have a Telegram? Daniel, I don't know if you're in my academy yet. If you join in there, and also we got a Discord page. I'm not sure if you're in our Discord, but you can join the Discord chat and chat with myself and everyone else under here. It's a free trading room. So it's not Telegram, it's Discord instead. So yeah, if you want any more info on that, just let me know. Gold, Philip, again, we can take the same principle of catching those next market moves and apply it here. And the reason why is because if I start up on the monthly, like you should, remember we do top down analysis. Okay, so that means you go from your top time frame and down. That's how you should always do things. Because that's simply what works. Those higher time frames are what rules the market. Okay. If you look at my monthly chart, you've got the long-term view, okay, and you can see it's an uptrend over time. And you need to go from the top down because you can see it's a long-term uptrend, okay, and in the midterm, short term, you can see it's hit this point, come up, hit it, come up, and then, of course, you're looking for the third part now. But catching that next big move, how would you do it on gold? Well, again, much like ORD, once you had your position long, you're being brought to new levels, okay? And if you just drop down a time frame or two to the daily, you can actually see that this is very sideways again. And just like before and every time after, this is what happens before you either get something like this, okay, or the market goes up, probably in my opinion, it could get slightly higher than that previous high and then have its move down. But nonetheless, our bias remains the same, okay? The longer the market moves up like this, okay, and then has some kind of stalling action, the more we can form that short bias. Because that market sentiment is going to change eventually. Eventually, something will happen in the news to say, okay, well, gold needs to come down, practically. And that's exactly what happened here. You don't have to be Einstein to work that out. Okay, you just need eyeballs. And I hope, well, if you don't have those, I mean, you can still hear me, I guess. But nonetheless, you just need to look what's happened before because it's the same. The market comes up and up and up, okay? And then it comes down. And then it comes up and up and up, okay? And then it comes down. And the same thing will happen again. Whether the market stops here, okay, or it stops up there, it does not matter. Eventually, you will get that move and you will come back to reality. And catching those moves is all about being short after these massive rallies up and being long after the massive rallies down, okay? And understanding that, just like you had here, okay, you might get a bit of sideways movement, bottoming out. After that comes the move. So you need to be ready for that. Okay. So just bear that in mind. Specifically, you've got it for gold. Nat Gas, Ken Bruce, great to see you again. I've got US dollar CAD. Excellent. Thanks, guys. If you're just coming in now, please click the boost and get on board with the link below. I'm going to go forward with dollar CAD first. If you can hear my dog, apologies. I'm having to stay fairly nearby it because it's just had 3 Labrador puppies, and I've basically been nursing them all night. So I've moved in next to them for now, like a neighbour, to make sure they're okay. But dollar CAD, again, you're about sort of midway on that move before you're catching that short side, but as you reach up to this level, more or less, into these previous PA zones, it's very much feasible to scale in short, okay? And by scaling in short, I mean you're going to be selling at a level where there is reasonable value. So that would be 0.618 or 61.8% of the previous move. So I like it short here, and that's where I'll look to catch the move to the downside. So that's 136. Probably you could go in at 1363, or that's what I would do. Nat Gas, yes, absolutely. Ken Bruce, great to see you, Ken. You're back. Is there any specific ticker you wanted for Nat Gas? I mean, people ask me about Nat Gas all the time now. It's become more and more popular. Funnily enough, it's actually quite relevant at the moment. But Nat Gas, I mean, on a technical basis, okay, this is purely technical. This asset is a long, okay, because you're right in the pits again. Now, the problem with Nat Gas is the sentiment only comes when you've got something wild to drive it like that. So you could be sitting here accumulating commission losses or swap or whatever, depending on your broker, for a very, very long time, and you'll get nothing. Okay, so just bear that in mind. And because you've already had that massive sweep up and down, I wouldn't be surprised if that takes a long time. But again, it's the same principle. It's likely you're going to get a dawdle for a while, and then the market will actually do something. And that's how you would catch the big move. But it might take a while for Nat Gas to do that. So, I mean, really, I wouldn't bother trading it. I would focus on all the other assets that are more liquid or volatile, moving more frequently. Some guys in the Discord now, great to have you. I'll check that after the stream. But to be clear, Daniel, I've got a Discord page. I'm making a room for members who get on board here. I'm going to make a private room for everyone there. So NatGas have done, dollar CAD, gold, ORD. I mean, really, the principle, like I said, is if you're getting that sideways movement, eventually it's going to change. And that is very relevant on NatGas because it's so slow. The sentiment's been removed. I mean, when you had all that demand, you get this massive sweep up and then it just dies. Okay. And that has been frequent throughout history. So has anyone got any other questions or about trading or any charts in particular you want to look at? Okay. Be really handy if you can drop them in here. Please do that. If you're following me on Ethereum, I've called it several times. You will have taken gains if you followed those posts. What you're finding now is, okay, again, sideways movement gets really dawdly. It falls as it should because you've had that enormous rise. What's happening now is you're coming to this and the market's saying, hang on a minute, I need to deal with this. And that's why we called it long. And that's why we exited early, because we understand price action rules. If you don't get on with the link below, you will not understand price action rules at all. Okay. So just, get what you need and get started, because otherwise you're going to be very, very far behind and you might not understand what I'm saying. Euro New Zealand, Philip, excellent. Thanks. Chris, I've seen your question as well. I'll just get onto that in a sec. I can link that into what we're talking about. So Euro New Zealand on the monthly. So I would actually start this off on the 12 monthly. Reason being is because when you're coming up now, yes, you had a flash move in 2020 because of COVID, but really, if you go before that, you're only really come to 2015. It's a very long time. But if you're on the yearly chart, you can actually see all of these PA levels here. You can see where all this rejection is. And that's what forms my bias for this. So I would then go down to the 1 monthly and I would look and say, okay, well, I've just looked that far back and more or less I would like to start to short now. What you can do as well with this, Philip, specifically, is if you drop your time frames down, okay, probably 4 hour, 1 hour, and you're looking for something reasonable to give you entry confirmation, okay? So that would be a very large candle and then probably followed by something like that, and then you would want to trade it like this, okay? But anyhow, scaling in 1796, 1797, 180 is very feasible for me. I like it short of those points. Nonetheless, if you're using hedging methods like you should be, you've had a glorious amount of hedging opportunities there. But you can see you're running off these MAs and you're going up and up and up. It's been ages, okay? You've come up for ages. That is absolutely sure. Okay. And I fully expect that it will do something like that. And again, you're catching that big move, like I said, because you're just scaling in as the market runs away. Maybe the Dixie, please, or Eurodollar short term in relationship to gold. So this is something I'm glad you asked that, Chris, because lots of people ask me similar questions. Okay. And this, in my opinion, of what has worked best for me, what absolutely cleared everything up for me is the following. Okay. So the question specifically, Chris, is a really good one. Maybe the DXY, the dollar index, or the Dixie, or the euro dollar in short-term relationship to gold. Now, the problem with this is when you start to link all these things together, you will just get confused. Deal with them absolutely separately. Euro dollar and gold, you don't need to think about the correlation. And the Dixie is basically the euro dollar anyway, but flipped over. So the more, because I've had several members who've done this, the more you add into the story, the harder it gets to trade. Okay, if you think, I'm going to trade the euro like this because the Dixie said that, and because gold is like this, and because the economy's like this, and this person said that, it just gets so difficult. Okay, all you need to do is focus on two parts. Number one is your sentiment around that asset. So is it poor sentiment for the euro? Is it strong for the dollar? Because remember, the dollar is going to affect the Dixie, the euro, and gold all at once. So it doesn't really matter about the relationship between the Dixie, the euro, and the gold. It's about the relation. It's literally about the sentiment around the dollar. So if the news around the dollar is poor, then obviously euro goes up. Okay, and the Dixie goes down. So the best thing I can say is not to think about the relationship between the assets, okay? Because I really do believe that's a common misconception. Just think about the underlying part you want to focus on, which is the dollar, because you've got the dollar index, the euro dollar, and gold. Focus on the sentiment of the dollar. Now, in the short term, I wouldn't be surprised if you teeter around again because there's no sentiment. You can see that if you swapped your 1 hour. Okay, it just looks fairly ugly. You've fallen. It's slow. As per my live streams several times and posts, I much prefer it up here. Okay, now it is a short now. Okay, but if you're selling it, it's going to have to be very light. I much prefer the whole thing at 1115 to 1117. It's because you've got price action all along here, and if you zoom out to your monthly, okay, and you look further back, you've got even more. Okay, so there's price action there, and all the way along, you've got all these candle wicks and all this rejection. So along with that, you're coming along to your 200 moving average, which is very significant because that means you've got a very fair price for shorts because you come so far off that 200 MA and then you go from 0.955 all the way to 1115. Okay, so that enormous move, and again, linking into what we're talking about today, is preparing you for that larger short so that when you do actually get up there, okay, it's it wouldn't be surprising if the fall is significant. Okay, and you're not getting that massive south side sentiment. Every single dip back is just getting rejected. This candle's not strong at all, so I wouldn't be surprised if you get to that 0.1115. And after all, if you don't lose anything because you were never in the market in the first place, and there'll be tons of opportunities to use afterwards. So that's my bias on the euro, and it stands 1115 to 1117. So yeah, mainly from that, if you're looking to catch that larger move, let the market do its thing. But when you're looking at the market and you're deciding about the Dixie, the euro, and gold, just remember that you need to focus on what's happening to the US dollar sentiment wise. It's not about how the assets affect each other because they don't. They're basically the same thing anyway. The dollar index and the euro are the same, flipped upside down. More or less, not 100%, but more or less that's the case. So you don't need to to do that. You just need to focus on what's happening to the dollar specifically, because that is the main link between them. And that is what drives the overall market. And funnily enough as well, that's what drives the whole market anyway. Mostly is what's happening to the dollar. So I hope that clears that question up. Thanks for asking. That was a really good one. And all these all these analysis from everyone else is great too. Does anyone else have any other questions, perhaps? I'll just give a few seconds to pipe them in. Chris, specifically, if you, I know you're an Academy member, if you study those, and you might not have got to that point because it is a little bit later on, but if you study that sentiment trading part, you'll understand exactly what I'm saying. I have had many traders who come in and they say, okay, well, they'll say they're going to take a trade and they'll list like literally 10 reasons why they're going to take the trade, and it just doesn't need to be like that, okay? Because it's not all relevant. Number one, what's happening to euro or USD? Okay, so if the news says the eurozone is this, that, and the other, or the dollar is this, that, and the other, okay, you can surmise in your brain what you feel about it, whether it's negative for either, or you can use services like the ones I put inside the Academy. That's number one. And number two is fair price. Do I have a good price for shorts here? And yes is the answer, because you can tell that from the fact you've come all the way from here and you've got all the way up here almost, and the fact that you're returning to a 200 MA. Anytime you're returning to a 200 MA off an enormous fall, if you look back where you last hit that, okay, that's over a year ago. And then after this big swing, as I said earlier, when you're catching that big move, it's going to come after a significant move beforehand, because it leaves the room for that profit margin. Okay, you can't have a large fall without a profit margin, pretty much. FTSE and oil. Hi, Solomon. I don't know if I've seen you before. Great to have you on. Any questions, let me know. Philip, FTSE, absolutely. I'm trading the FTSE this morning. I'm hedging to the long side. Right now, I'm in gains. I'm hedging out my previous shorts. I got long about there, I think. So I'll kill that off in a sec. I am actually on the stream, so I should be doing it. But yeah, so I'm long on. I'm short overall as my bias, but I took it. I took it to the long side for hedge gains. Remember, with my method, as you know, if you've been watching me, I've shorted and shorted and shorted. I've got a drawdown at the moment, okay, but because I can hedge on lower time frames, I can get gains that way. And the fact that, again, like the whole point of this stream, eventually the market is going to do something like that, and I can exit those previous positions because my risk is in accordance with my overall equity. In other words, I have sufficient funds and sufficient hedging methods to prevent myself from margin calls. Okay, it's as simple as that. So US oil, thanks, Philip, for that question as well. US oil. And just to be clear, my bias is still short on the FTSE when it raises up. I'm only long because I'm hedging. Oil, not entirely strong to the upside. I wouldn't be surprised. Still, my bias, it would be light at 73.5. Okay. The chart's ugly at the moment, but this is not. I mean, you could take that for scalp trading very, very lightly, but I would prefer it 73.5 if we can get there to the long side. Really good questions there, guys. I am going to put this on YouTube as well. Has anyone got anything else they could ask in the chat, perhaps? Just let me know. I'm sort of, I'm here. I'm here to answer them. So yeah, anything. I mean, it doesn't matter what it is specifically, whether it's relevant to the topic today or not. It would be handy if it is about catching those larger moves. Like I said, for the FTSE, and this links into your question, Chris. If you look how the FTSE's come up from 20th of March 2023, right? So that's just over a month ago. And it's up and it's up and it's up and it doesn't stop. Now, inevitably, that is going to get absolutely smacked, okay? Just like it did here when I called it short many times, okay? Eventually, it will come down. And you've got that sideways movement now. And that gives you the opportunity to hedge. If you have my hedging methods, you can hedge all that out. And it allows you to free up your capital. A lot of people don't even consider that as a possibility, unfortunately. But that is how you do things if you want to be trading sustainably. So, yeah, I mean, that covers the FTSE and oil. Has anyone got any other charts they want to look at all? If you want to just pop those in the box. Solomon, great to have you. If you want to get started, just hit the link underneath and you can do that. Thanks to all those guys who are boosting this, sharing it, commenting. I really appreciate it. I mean, I check the streams each day. Normally, I have the most likes and the most comments and the most engagement and the most views, which is really good. If they got shared a bit more, that would probably be even better. But yeah, I mean, I just like to deliver quality pretty much. I've studied trading for a long time, and I like to keep it simple. And I'm throughout my career, although I'm not even 24 yet, I do own 2 other businesses, and really the idea around them is making things simple. And that's exactly what I'm doing here. I'm making the idea simple. Instead of linking all these other factors that could possibly affect any different type of asset, I'm more interested in what's driving that market and where I can get a good price. Okay. Because at the end of the day, no matter what you're trading or what industry you're in, you're doing the same thing. If you want to buy something, you buy it for less. If you want to sell something, you sell it for more. And in between that, you look at the market to gauge whether the price is rising or not, and therefore whether you should be buying it or selling it anyway. So don't get confused about that. It's just simply another market, another way of buying and selling. It's no different to anything else. And that's really key because a lot of people fail to grasp that point. Okay, so going on from there, the DAX, anyone wondering, I like it short. Generally, the FX market's dawdling a bit. You do have a lot more news on Wednesday, which might shift things up. S&P, I'm scalping as well, but I prefer it short 4250 still. Long side, a bit lower, 4005 to 4050, I would say. And that comes around there. So I think if we don't have any questions in here, then I think I'll probably end it. But yeah, I mean, any other questions you want to leave here, let me know, guys. If you do want to change your trading today, simply go to the link under the video. Okay, it's free. Just grab the link, go in the Discord, chat with us, change your trading today. I'm going to put this on YouTube as well. If you can like it, that would be amazing. I really appreciate everyone's attendance as well. Thanks so much for coming, and I'll keep you up to date. Thanks for watching, guys. As always, trade safely, trade small, don't over leverage. Okay, just be really, really careful on your risk. Trading is all about managing risk. Do not get sucked into emotions. Do not trade too large. Thanks for watching, guys. Hope that helps. See you in the next one.